Check, please.
Hey, everybody. Welcome back to Everything Money. We are doing a deal of the week. If you've been interested in real estate and followed our channel, it's now time for us to get back to talking about the real estate. We want to learn now, so when the market comes down to a normal place, we're ready to buy. We have our real estate expert, Andrew, into it. Andrew, you have looked at thousands of deals over the last 20 years, from single units to 300-400 unit, $20 million apartment complexes. So I welcome in Andrew Striegel, and we're going to talk about a deal today. This is an 8-unit in Euclid, South Euclid, Ohio. Andrew, give me some of the deets about this property and why you brought it to us.
We got a property in South Euclid, Ohio. This is a property that's actually sitting on the market right now.
Okay.
It's listed on the MLS. Seth, you have the listing here?
Yes.
Okay, perfect. So you got it up. It's at $499,000. It's an 8-unit building. You can see from the main picture, it's clean looking.
Yes,
look,
I like
it's a
this.
brick building. It's an apartment building. There's nothing wildly fancy, but it's got garages, and you can see from the hallways, and scroll down a little bit more. As far as updates,
wow,
kitchens and bath, there's nothing crazy fancy. This is something that we'll tend to call a Home Depot type finish.
Okay.
It's the bottom level stuff sitting at Home Depot. The other thing I want to note, when you're looking at these pictures, Seth, you're a photographer, right?
Yes.
Would you put the best looking unit or the worst looking unit?
Of course, the best looking unit on here, sure.
Correct.
The best
So
hallways
I'm going to guess, and this is one of the reasons why it's always important to do property visits. I'm going to guess that not every single unit looks like this one.
Now, call me a wizard, Andrew, but
Wizard.
this says this photo was taken in 2010.
Wizard.
So,
do you see my point?
That
Not
was
every unit
just a couple years ago.
So now imagine these Home Depot cabinets after 12 years of use. What do you think they look like now?
Okay, so how do we start thinking about if you're a single person out there, a single investor looking to get maybe your first unit? If you want to start with 8, you better have a lot of money. What are the first steps we need to look at, Andrew, when looking at this property?
So we're looking at the rent rolls, and we're doing things. We're constantly questioning the numbers. Just because you have a number in front of you and you have a photo, it doesn't mean that's exactly what it is. Seth, you pointed out 2010, the photo, it says right there. You're looking for things. You're asking questions. You're always, and just because the broker's telling you something, just because the owner's going to tell you something, it's not Bible. When you're buying in the apartment world, it is buyer beware. It's not a single family house. You got to sit there and do your own due diligence.
Mm-hmm.
And sometimes sit there and work with professionals. It may cost you a little bit more, but it's better to have the right answer than make a wrong decision. Does that make sense?
It does. That's
Cool.
why I have you here, which I love.
All right. Let's go to the rent roll. That's always a good spot to start.
Okay, so there's 8 units. The market rent, 75, 875. Those are the two numbers they give. These
Right.
are 1 and 2 bedrooms. We love these 2 bedrooms. I know that, Andrew.
Yep. Always love 2 bedrooms, more flexibility as far as who's going to rent them. But yeah.
Oh, no.
Market rent?
Yeah, I was reading the market rent.
This is where they're saying,
Mm-hmm.
oh, we think we can rent for that. But look where they're renting them for. Now, where does pricing? They're going to use this $6,750.
Yes.
They're going to use that to sit there and price the building off of.
Okay.
This is what we're going to use, the $52.92. Why? Because that's what it's actually doing.
Mm-hmm.
The comments always, they're like, oh, it's just under market. You see a couple of zero deposits and stuff like that. And the owner's got all these things. Increase rent, increase rent. If it was that easy to increase rent,
Mm-hmm.
to sit there and walk up to someone and be like, hey, give me $150 more a month. Why didn't the other owner do it?
Right. Just
Because maybe it's not that easy.
okay. I like
Or
what you're
maybe the
saying.
units aren't worth it. Maybe he's got, Seth, maybe he's got cabinets in there 11 years old. You don't know. You don't know.
Well, maybe. Okay. Right. Good
So
call.
again, we're not focusing on the 6,750. It's good to note. I'm glad someone in the world thinks they're worth this much. Now, they may be. We'll sit there and use these numbers to go back and go to Apartment Guide. We're going to look at other buildings in the area. If we're going and planning to rehab this, and we want to put some nice stuff in, maybe the area can handle granite. Maybe it can handle stainless steel. And when I say handle, it means we can get the price or the value out of the rents.
So this
So
is
I'm going
something.
to go spend money.
Yeah, this
Can
is
I get
something
that
you guys
back out?
like to do. Is you guys like to make
Love it.
your
Rehab.
rehab and make it one of the best places on the street, right? I mean,
Yeah.
I've heard quite opposite from other people. Is that
What do you mean?
most people try most. The folks I have talked to about this, they want to get this rehab under the cheapest. They want to use the cheapest things, find the sale items, get the cheapest washer, dryer, and stove they can. But you guys like to go sort of above and beyond and make it almost the nicest place around.
So there may be, I don't want to say there may be, there is
Go on.
a situation where we're both correct.
Okay.
If I'm going into, I'll call it in real estate, we always call them like certain classes. You'll hear people talk about A class, B class, C class, D class. And that's representing if you look at a large area, metropolitan area, A is the absolute highest rents.
Okay.
And so you're going to point to those, the best, fanciest locations, which is getting the newest building with the highest. That's your A's, right? Your brand new constructions. Your D, it's a lower class area. There's going to be probably a higher grouping of Section 8 tenants.
Okay.
Doesn't mean that just because they're Section 8, it's a D.
So I'm not going to put the baby
that's
seal.
Where your person you're talking to may be correct.
I see.
Don't go put granite in there. Why? Because you're not going to get the money. Section 8's not going to give you any more because you have granite versus a Home Depot laminate counter.
I see.
So why put it in? So in this case, I don't need to go to Section 8. I can get a retail tenant. I can go try to find someone who's going to give me more of this market rent and away from some of the lower end. Why? The person that lives here can afford $551. Can they instantly afford $850, $900? No, maybe not.
Mm-hmm.
Their income doesn't justify it. We always talk about when we rent to people, among many other things, you need to make at least 3 times your rent in your income per month.
Okay.
If you don't do that, instantly you don't qualify. Done. Doesn't matter anything in your background, your credit, your maybe felony, whatever it is. Doesn't matter. You need to make 3 times. So again, if we're going to sit here and put a bunch of money in, we're probably going to have to re-tenant. Not only do we have to get them out because you can't rehab a unit if it's full, but yeah, we're going to re-tenant. Our 8 people that are living here right now will not be the 8 people that live here in a year or 2.
I'm always saddened by that, but business is business. So should we get into real estate calculator?
Let's do it.
So guys, this is the Everything Money Real Estate Calculator. This will be part of our software moving forward. Maybe in the next couple months, we will keep you posted. We have developers working on it. You'll have this as a part of your app. And if you're looking to do real estate deals, you absolutely need this. We'll show you why. All right, Andrew, where do we start with this? Obviously, we have the name of the property. Should we keep going?
Yeah, let's not. This is basic stuff. So keep going. Okay, general. Yeah, we're putting in 8 units. Appreciation, again, you can play around with it. What was last year? 6% or something like that. But trend it, what is it? It's below 3 even. So this is a number. It will affect the return. So put a realistic number in there. Vacancy, you're always going to have some. Here's the price, cost to sell. If you're rehabbing it, Seth, that cost to sell, that is a cost of your broker. That's
6%.
Right. That number needs to go higher. I'll tell you, if we were going in and rehabbing it, from a tax standpoint, that needs to go higher because the property taxes are going to adjust up on your exit. So that number will definitely need to increase as we're sitting here and trying to put a realistic number on it. We can always come back. That's the beauty of RECalc. You play around with all the numbers and try to get a little aggressive, a little conservative on different items and figure out where it puts you.
Okay.
Same thing with cap rate.
Yeah, so cap rate, again, since I'm always confused, this is the rate of what's going on? Rate of return I would like.
If you paid cash for a property,
yeah,
this is the return you would be getting.
Okay, kind of low, right? This is not a good return on my cash.
Again, that's why when you're in real estate, people are using debt.
I see. Of course. Okay, so great.
That's changing everything. That's why we're going to bring it in. You'll see in a second when we're over here looking at IRRs and recaps. Even though we have 6.75 in here, that doesn't mean you're getting a 6.75 return, right? There's a lot of other factors that are going into it.
Okay, keep going.
We're selecting here, hey, we're going to refinance it. We're going to rehab it, all that fun stuff. Seth, let's keep going. Let's go to income.
Okay.
All right, this is fun stuff. You showed before you had the rent roll up, right? We have 2 one-bedroom units. We have 6 two-bedroom units. Size of the units, here's their current rent on average for both of them. Look at this here. We've got, what kind of spread is that between a 1 and a 2 bed?
Oh, just $60.
Is it? Even
I'm sorry,
32,
30
let's
bucks.
say.
What am I even saying? $30. No, what am I looking at? Sure.
Okay, so $30.
That's
For $30, do you want a 2-bedroom?
Yes, I do. Of course.
$1,000 for you? Of course you do.
Mhm.
That's ridiculous. I mean, at minimum, you should always look for about $100 spread. And again, this is in the Cleveland market. It depends where you're at. Obviously, as rents are going up, this spread is also going up as well. But you're looking for that alternative. If it's only $30, why wouldn't you take the extra space?
Of course.
Everyone will. So that means that either this number is way too low, or, sorry, going backwards, this number is too low.
Yes.
So because it's full, I was going to say it could mean that this is too high, but that's only if these units are vacant, which they're not.
Okay.
So your 2 bedrooms are cheap. Now, we go in, we do rehab. Could you get more? Could you get less? That's what everyone's trying to figure out, right? Go look in the area, go see what other things are renting for. We use these plugs for now. Scroll down a little bit.
Okay.
There's a laundry on site, so we're getting a little bit of money for that. You're going to have some miscellaneous with month-to-month and pet and some random stuff, but utility reimbursed is the big one. That's where I'm going to sit there and say, in this area, tenants pay for their gas, they pay for electric, especially in this building, which is a forced air building. So they're paying their gas, they're paying their electric, but the owner's paying the water sewer.
Okay.
So this is a way as an owner for me to implement something which the current owner is not doing. I'm going to charge each person, call it $40 a month, and that's going to help cover the water sewer costs.
Okay.
In this market, it's very standard to see owners doing that. It's not being done, so this is money to pick up.
Okay.
Let's look at expenses.
Expenses. Boom.
All right. Property taxes is what it is.
4.9.
Correct. In Ohio, when you buy a property, they say it chases. That's every single time a new person comes in and buys something on the open market, it's considered arm's length. Your property tax cost will increase to the new value.
Of course.
So the old owner may have bought it for, I'm going to make it up, $100,000.
Yeah.
He's paying $4,900.
Uh-huh.
If you buy it for $300,000, you're no longer paying $4,900. It triples, goes up to the $300,000, and you're paying 3 times that.
Sure.
Does
Okay.
that make sense?
Is this something you look up to see last time this building sold and what they might be paying? Or
Yeah, it's I don't know where people don't have it, but yes, most auditor sites
sure. Okay.
have very friendly websites now where you can get all that info.
Keep going.
Management fee, that's paying someone else to do the daily work. Again, this is something you could do yourself. It's only 8 units, but in this case, we're paying someone to do it. I would even argue that this 5% is unrealistic for 8 units. You're probably going to see in that 7 to 8%, and this is $150. You're probably going to pay 1 month commission for your rent. So we're looking $875. Let's say the average is about $800, and if the average tenant stays 2 years, that's $400 per unit annual, not $150. So again, it just depends how aggressive that you want to be with your underwriting.
Okay.
So insurance, this is a cost. You can look at his cost of insurance, but you can also start quoting out with someone else. Maintenance, repair, this is all the casual daily stuff. You could have, there's a lot of expenses that are kind of piled in here. We're using some just kind of industry numbers in that. Same thing with capital expense. This is your rainy day fund.
Okay. Water heater breaks or
Yep. Do me a favor.
Yes.
Seth. So it's 300. This is a good example when you're going through things. This 800, it's not 800 per year. This is 800 per unit, right?
Uh-huh.
We have 300 in here. We need to make that not 300 a year. See how it says total?
Yeah.
Click it. Now it's per unit,
Okay.
which is accurate.
Great. Okay.
So again, advertising, landscaping, got to pay someone to cut the grass, do the bushes, all that. Snow plowing. We just talked about it. I got the hoodie on for a reason, right?
Mhm.
Someone's got to move the snow around. Other costs, you can play with this. Tenants are paying this, but you will have some outside lights. You're going to have random vacancies that you're going to have to cover some costs, et cetera.
Okay.
Trash, occupancy permit. Oh my God, everyone leaves this off.
Yes.
No one puts that on. When I said no one, this person selling the building included.
Did not put it on there?
Correct. And I know I wrote other in here. There's some other items that they did provide, their P&L and expenses.
Yeah, I saw that.
And there's some other items related to the building with costs. And rather than sitting there and writing them all out at $400 a piece, it's just an easy way for me to group it.
Yeah, they spent $600 on sex jelly for the whole complex, which is strange.
Which is odd because you spend so much more.
Yes. I mean, they're bargain shopping that. Okay, let's go into rehab.
Yeah, rehab. All right. We were doing a simple rehab. This isn't anything crazy. This is 12 grand.
Nothing
You've
special.
seen us on the show, for those of you who are longtime fans and tuned into episode 3.
Real long time.
Yeah. When we had jingles and everything, we were spending sometimes upwards of $20,000 per unit.
Mm-hmm.
Just depends on the unit. To your point, Seth, it depends how far you want to take it. Also depends, in this case, the unit itself, the drywall, the bathrooms. Like, there's certain things you don't need to do. I lowered it in this case because, again, I don't think I need to spend $20,000 to get the returns that I was going for.
Okay, $12,000 for rehab.
Correct. And again, this shows I'm splitting it up, and I'm doing all my rehab in the first 2 years.
Okay.
Let's go to some debt.
Refinance.
Correct. I'm refinancing at the end of year 3. That's after I've finished all the buildings, re-tenanted it, et cetera. I've got my value back out of it. Interest rate, again, you can play with it. Seth, we're talking about interest rates going up, right?
Yes.
Let's play with that one a little bit. Knock that up. I mean, it's fair to say, let's put it at 4.25.
Okay.
We all know rates are going up right now. So this is sitting there saying, where do you think it's going to be in 3 years? No one's got a crystal ball, but we know it's going to be up. Someone could even say, Andrew, I think it should be 5%.
Uh-huh.
All right, cool, 5%. But for now, let's placehold. Mortgage.
Okay. Mortgage.
75% LTV is very standard for something like this. Again, LTV. Seth, you remember that?
Loan to value, yes.
Nailed it. So you got 25% down payment. Again, this is initial. I'd even take interest rate right now. I'd bump that up, call it 3.5.
Right here?
Yep.
Okay. Love it. Okay.
25-year AM. Let's bump up our rehab
3.5
well.
here?
Yep.
Great. Okay.
All right, cool. Now, using RE Calc, let's go ahead and look at the recap report.
Oh, my gosh. Look at
So this is showing how much money we're bringing in, our expenses, what our NOI is.
Oh,
and this, the value of the property, this is using the cap rate against the NOI, right?
Uh-huh.
Now, am I making a lot of money here? No. It's saying my building's not worth much at all. I understand that. We have a lot of expenses right now. We're in the process of re-tenanting the building, so you're going to have vacancy. Those first couple of years are going to be tough until we go in and refinance. Go ahead and view deal.
Oh, my gosh.
Let's get to the what everyone wants to look at. Hit view IRR again. Sorry.
That's okay. Oh, my gosh. Here
Scroll down.
Okay.
Look at that IRR.
What? Minus almost 4%?
Correct. So what that's saying is based on the price, we're paying too much. We're putting too much rehab in. We're not getting enough spread on our rent. You don't have the value. There's no reason you should be paying $499 for this building. It's not worth it. The rents aren't there. The value's not there. The NOI is not there.
What dummy comes through and buys this at $500K?
Well, in fairness, it's sitting on the market. So currently, no dummy.
No dummies. Okay.
No dummy.
I could be that dummy, though.
This is cynical, I will say, in this market yet. A lot of dummies out there right now, we feel like.
Okay, great.
So let's play with it a little bit, though. Let's say cap rate. Maybe some people go, look, 6.75, that's pretty aggressive. Pull it down to 6.5.
Okay.
Cool. Now let's sit there. We're going to leave this alone. Average market rent. What if you were able to get a little bit extra in rent there, Seth? Just give it us a little notch. Okay, so now that's saying by the time I'm done rehabbing it, I'm going to get a little more than I thought. I underestimated. I was too conservative.
Okay.
Now, let's go back to the big one. Well, what's our IRR at right now? We played with two things.
Okay, 0.6%.
We broke the seal, we'll call it.
Okay, that's cute.
Back up to the top, price.
Oh, but you got to pay less.
Right, we're not going to do that. From an IRR standpoint, you're going in, you're using money on everything money we talk about in the stock market. If you have another option where you don't have to go through all this headache, let's say S&P average return, you're 7-8%, you're not going to want to touch any of this real estate and deal with the headache, correct?
Yes.
Okay, so you want to be up in that 15 plus
15.
range?
We're far from that.
Okay, so let's pull it down.
Oh, boy. This is where we're... What do you want to do?
I know, this is the fun. Keep going a little bit.
Okay, we're going to offer...
And you can see all of our numbers are changing as we're doing it.
449.
Keep pulling.
Okay, I'm going to...
Keep pulling.
Oh, boy.
Keep pulling.
Really?
All right, so now we're at 410.
Okay, we're on
something that was what?
500?
Yep.
Used to be
Where's the return?
535. Okay, our return now is, okay, hold on a minute.
Getting there.
It's not what you buy, it's what you pay.
Yeah.
We have
everything
to pay.
has value, right?
Mhm.
On everything money. Everything has value. Look, you have to sit there. You make money on the purchase. Yes, we're creating money by putting value into the property and raising rents, right? But that's our value. That's not for the seller. That's something we're creating, not handing off to someone who didn't do any of the work, who told us that market rents are, $125 higher when he wasn't able to do it for one of his 8 units.
Yes.
Over the last 10 years with his old cabinets.
So in
right?
essence, we need to get this price even lower to get this. Here's 20%. We need to pay. Okay, so
all right.
So if we're
So
paying
now we're talking.
400
And by the way, that's the strike price.
Mm-hmm.
That's where you end up in negotiations. Correct?
Oh, wow. Okay.
You may have to offer less. Now, this gets into the theory of making offers, et cetera. We're still sitting here going $399 is the number. They're asking $499. Is that a possibility? Do I sit there and come in at $350 and negotiate up? Or are they going to laugh me out of the room? So I got to come in $375. Or do I just sit there and be like, look, here's my number. This is the most I can pay. It's $399. It's cash and you want to refinance, or you're going to go in and find. There's a lot of reasons they may or may not take it. Maybe he's had no offers and there's a reason he needs the money. You don't know. So sometimes it's good just to put something on paper. You may get laughed out of the room. They may say, get out of here. We'll get a ton more. But
all right, thanks, Andrew. Much like investing, folks, in value investing, is you have to be diligent and patient. You need a tool like this, and sometimes you have to wait for that price to come down, wait for the housing market to die down a bit, or just go in there at far less value. Just a lot of our stocks, right? We're Alibaba, we were a no-go at 300, and now it's at 100, and we absolutely love it. So
know your numbers.
Know your numbers, and the cycle will come back into our sweet spot, and we'll be ready. So that is our take on real estate calc. You will get this software if you're an Everything Money community member. Go to everythingmoney.com or join through patreon.com/everythingmoney. You will get this this year. As the year progresses, our developers are working on it. We're going to make this part of our app, and if you've been always interested in real estate, we welcome you in to join our community and learn from us. You'll have Paul in your corner. You'll have Andrew continuing to give us content, and this is exciting. I like real estate, Andrew. At some point, I'm going to get in on this. I'll certainly need your help, and we'll be using this exact program to do so. So, thanks for bringing this. We'll do more of these, Andrew. You know, I love you dearly. And at the moment, obviously, no deal. We need to pay far less. Like a lot of overhyped stocks, we need to pay far less to get that return moving forward. So that's our take. Fondle that thumbs up, and we'll see you next video.